Welcome back. We're live here at the Rules Symposium, final day, and coming up, the keynote speaker is with me right now. You guys know it's an honor and a privilege for me to be sitting down with Mr. Rainer Smallwood, CEO of Wheaton Precious Metals. Man, now the largest royalty and streaming company in the world. Life seems pretty good. How are things at Wheaton?
I couldn't be more excited. You know, the run of success that we've had and the growth profile that we've had the investment team into over the last 4 or 5 years, they're delivering. It's one of the strongest growth profiles of the last years. Gold looks very strong. Silver is starting to wake up, looking quite strong. Anyone that knows me knows that I'm more a silver bug than a gold.
We have to talk about that,
Reading of silver.
especially after the price performance. I woke up to silver this morning looking at the price.
Yes.
Wow.
It's always said silver lags, but then it outperforms once the silver solid. So yeah, couldn't be more excited.
Yeah, absolutely. And as a shareholder, I'm excited. And you guys really made the streaming model cool before anyone else was applying it to the metals space. And I've got to ask you, I've heard you talk about streaming in particular. People are kind of familiar with royalty codes, they know the royalty contracts. What is it for you that's so attractive about streaming?
Well, I mean, first off, the reason that we've had such great success in the streaming space is because we actually deliver more value to our product. And that's just through the fact that it's aligned. It's actually an operational flow chart. It's consumed an active versus a passive flow. You actually get metal delivered to us in the rates amount. So because of that, it actually does deliver more value on a full basis to our partners. So that's one of the reasons that streaming has been so successful. But there's so many other attributes that sit on streaming that deliver extra value. It's the partnership that you have with your partner companies, with your operator companies. It's the flexibility of how you can shape that stream to deliver value and to adjust value over the course of the life of mine and build stronger partnerships. And I really do think that that's one of the keys that we've had at Wheaton in terms of being successful. So we work as a partner, try and find ways to help our partners be more successful. And that's strong. Real big stuff. Streaming versus the traditional royalty. Where's my check? Send the auto.
Yeah, mailbox money.
Exactly. Right? No, it's, we actually take an interest in how the mine is doing. You contribute and try to the success of it. We're always looking for ways. We see a lot of mines out there. And so all of that really adds up to the fact that a stream is just a better form of partnership.
Elaborate for viewers how else you add value other than just obviously the financing aspect. You guys have been around the industry forever, right? Whatever aspects outside necessarily the financial support that play into, as you mentioned, adjusting value over the course of any given month?
Yeah, I think that first off, we've got a pretty strong reputation for something. And so having Wheaton's names on a project gives a project a stamp of approval. And I say that with time when I hear companies talk about that Wheaton stamp of approval. So that's our first idea. When we go through with a wide open set of eyes. We start from first ones. We'll start with the assay database and build the entire block model out. And we like comparing up to the operator, right? It's a good check. It's a good measure of how a project stands up. So that's one of the first things we do. But the other thing that I'm quite proud of, the two skills we've got to use, the efforts that we put into in terms of maintaining social license, the contributions towards community support programs. We recognized a long time ago that even though we're not the operator, we're getting a benefit from these operators. And so we should be contributing back to the communities that are so graceful to allow us to operate in their back. It's something that I've been quite pleased with in terms of how that's actually expanded beyond the streaming model. And now royalties, you're seeing the royalty companies step up and starting to contribute to communities. And anything that helps our partners have stronger social license is a benefit to all parties involved. So, that's one of the other areas we deliver value. We have a technical ambassador program. And then we just have an unwanted value program, which is that we're always looking at the projects. Mines change over time. Economics change over time. So, we're not scared of sitting down and saying, is there a way that we can adjust to preserve value? We're not a charity by any means, but to adjust the value to sort of reflect how a mine has changed over the years. That flexibility just unlock so much additional value. And more importantly, it builds strong partnerships. Keep in mind, we supply capital to the mining industry, which makes us a service company. And the holy grail of a service company is a repeat customer. A customer you don't have to sell, you don't have to convince. And it's one of the key things that, more than half of our transactions.
That personifies a lot of the success that you've had around the compounding aspect of assets. Bring it back to that win, 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 win for the operator, means win for you guys, which means a win for the customer acquisition costs. Well, think of it that way, is significantly lower because you've got the repeat relationships with your business with over time.
We have an overlying mantra in our office. The stronger our partners are, the stronger we are. So everything we can to help our partners instead. But that's what drives us. Is all there ways that we can help our partners be more successful. Because what's happens,
Especially when you apply it to a rather complicated and complex business like a mining industry, right? It's not exactly a straightforward business to be in from an operational perspective.
yeah, so many people that looked at the streaming business model and felt it was a great one financial engineering. You should never, ever forget the ability to, and not so much to look for good approaches, but to avoid the bad ones. That's the real key for
Total value. Fast forward to today, and the stock price is up roughly 90 to 100%. I don't know how it's writing about. Obviously, that's a great result, but I feel like we're just getting started.
Yeah.
And where do you see, let's say, the next few years in terms of growth, in terms of production, in terms of metal prices that we are?
Well, it's one of the most exciting aspects of where we are at this stage. The growth that we have over the next really 5-6 years is incredible. We've invested into a number of development projects over the last 4 or 5 years. Coming online, we have 9 new mines contributing new production to us over the next 5 years. 4 of them are coming on this year. In fact, we've already seen production from 2 of those mines. Flat Reef operation, Ivanhoe, starting up at the end of the year. Then we're part in September. So it's really that growth. Forecast this year, we had a really good first quarter, so a great start to it. But our forecast this year is somewhere between 670,000 people. We're on a track to get to 1 million. There's no royalty or streaming company that's ever been anywhere near that currently. But we're going to have a few more acquisitions between now and then, which will probably even accelerate that.
That'd be my next question.
60% over the next 7 years. For a company of our size and scale, we take the streaming and royalty model to a level that it's never been.
Absolutely. Well, exciting times. It sounds like I need to revise my numbers. I was underwriting maybe 800,000 GEO over the next 2 years. But wow, 1 million gold equivalent ounces by 2030. That's going to be pretty special. Now, you mentioned M&A. I've been talking with Uncle Rick Rule, about this sector. At the top end, there's you guys, there's Franco. And at the bottom, there's a lot of these smaller cap companies that are trading at quite steep discounts. And I imagine a man in your position is looking out and saying, okay, we got our strategy for growth. It might be a lot easier just to buy this smaller companies at a premium, but, less than 1 times now, and take it through that cost synergy, remove the SG&A, and all of a sudden it'll be like the Wheaton portfolio and have that stamp of a Wheaton multiple.
Yeah. I tend to think the market is pretty good at assessing the challenges that we see, especially with a lot of the smaller startup companies, is that they really had to give us their weaknesses in their agreements in order to get their stuff like awards. So, one of the challenges is, obviously, we've been in the streaming business now over 20 years, so 25th year of operations, and we've learned in terms of how a deal should be structured to preserve value, preserve interest, to make sure that it's a win-win situation on both sides. And so we're not fans of some of the structural flaws and structural weaknesses that we've seen in some of especially the new entrants, the in this space. And so, those assets doesn't make sense to us when we can still source new projects, just offering them. So I think our track record, our focus, we're always looking for opportunities in the M&A space. And if something gets priced appropriately, then we'd be happy to step out. To date, we haven't seen anything that looks attractive from the M&A side. The preference is to write and author the deals, going as our own deals, then. And then every year we're going to have a good strong boss. We've been able to do that. We've committed to over $2 billion in new acquisitions over the last 2 years, which is slightly more than what our net cash flow to me is. So our focus is really still on sourcing the good quality assets, focusing on creative scale. I'm not really interested in the a shotgun approach or the lottery ticket approach. I don't want 500 assets. To me, this is a focused, high value portfolio of assets that delivers value, and each asset. I'm really interested in the lottery ticket. I've always said lotteries are a form of voluntary taxation. The number of assets in our portfolio, to me, is not a metric. It's the quality of the assets, the answers tied to those assets, and when they're going to get paid.
You're a lot of wisdom, experience in the answer. Is there a common error that you've noticed throughout some of these contracts?
I mean, first off, we don't like buy down or buyout clauses because they only.
Yeah.
If you're losing, you get stuck with the
You're capping your upside, right?
It's a one-way option. So we've never been a thing. We do have some drop downs. We've had this sort of this competitive space, and so we've had to give up. So we're taking risks a lot of times at the very start, and pretty high risks. The compensation we get from taking those risks is the fact that we do get that inflation. So, the aggressive drop downs, the pilot clauses, the limited areas of interest, that's another one that's sort of has been a pet peeve. I've seen a few, there's a few other structural, this is how the contracts work. Extreme political risk, extreme gold, extreme silver. Don't extreme political risk. We leave political risk with the op level, and that's why we need guarantee. We've seen even some of our bigger moves struggles with it of late.
Yes.
That was a deal that we were the highest bidder on, and they wouldn't give us a parent guarantee. They walked away. We held to our principles in terms of it.
Turns out to be a good decision as it played out.
Exactly. So it's just it's fun because there's always skeletons in the closet when we dig into these things. And so I'd much rather really often of our own reality. There is a lot of opportunity. There's a lot of opportunities that be selective, focus on good, high quality portfolio that is consistently delivered. Be flexible with the portfolio, try to unlock additional value, don't just break the deal and toss it. Sit there and always want to focus with it, understand how they'll go. It's been a good path for us.
Reflected in a lot of the capital efficiency numbers that I write about with you guys in terms of the company. Rick and I have spoken in the past about this particular model and the best-in-class operators. You guys are certainly amongst that tier group in terms of the metrics of revenue, our employee and capital efficiency. I'm curious to know, in your mind, is there a metric that you like to keep an eye on, above all, as an indicator as to how things have tracked?
It's a metric that's not commonly used. It's one that we actually created. It's guessing game, so to speak, out of the equation. And what we do is we apply the risk rates or the discount rates, whatever you want to call them, to the ounce on a time basis and bring them back to the net present ounce value. And then we look at what an acquisition trades at. For us, we're very bullish of this. We're probably paying somewhere around 90% of the spot price on a long-term basis. For our gold, it's probably around 85-90% on the silver side. A true measure of accretiveness in today, an outside transaction is the cost per net present ounce and what percentage that cost is of the spot price of the day. Our objective is to have a cost per net present ounce of less than 90%. So it's an interesting metric. It's one that we've created ourselves, but we find it very effective at looking at projects to determine, are these accretive acquisitions? Do they really do? It's something that I think it helps us in terms of our promise, which is even in a flat commodity price, we will deliver reasonable returns to our shareholders. The price moves, as we're seeing that great performance to our shareholders. It helps us maintain.
It's a fascinating metric. I've never heard of it. It makes sense. You guys originated it, but I'll certainly be studying it. And that ability to perform and deliver reasonable business case return on invested capital throughout a flat or bear market and provide a whole host of optionality on upward pricing, volume, capex that's not necessarily paid for by you guys. It's truly is that individual to be. As you look out now, is there anything that most excites you? There's one thing on your mind that prospective investors, shareholders should know that you feel is perhaps underappreciated?
Well, I'm gonna go back to a mentor of mine, Ian Tanford. Ian and I worked at the original before that Wheaton Riverside. building that up at one point. It was the large, the creation of the original silver Wheaton and now Wheaton precious metals was a spin-off of that. That I'm going to go back to, one of Ian's comments. Ian was an incredible financial genius and a vision in terms of success. I remember when he kind of brought me into it has forever resonated with me, because it's not so much about finding the right mines to invest into. It's about finding the mines that you should stay away from, the mines that you shouldn't invest in. That's the objective, is to celebrate the no's, to celebrate the ones. Don't sit there and pat yourself on the back for every act. You should pat yourself on the back for the ones that you avoided. Celebrate those ones as much as, right? And so just keep that in context. We do work in a cyclical market, and so we do see price cycles, which means that there's times to buy, there's times to acquire, but always be consistent in the fact that sometimes the market gets frothy and we don't need to do acquisitions all the time. So a company like us with such a strong growth already, we don't need, we're hunting growth because we've already got so much organic growth. So be patient and just make sure you stay focused on the quality. I mentioned earlier on the reputation, the operational reputation that we have, the technical side. Reputation is so, so tough to build and so easy to lose. And to maintain that and staying focused on that. So something that's worked well for us.
Indeed, Wheaton name does carry a lot of weight. You remind me a lot of something that Rick mentioned about success in the banking industry, finance industry. It's as much about the loans you don't make as the loans that you do make.
Still like the Uncle Rick reference.
Uncle Rick, yeah, I kind of accidentally made him famous for that. So hopefully he likes it. It is a term of endearment, Rick, if you're listening. I have to ask, is there a book of yours that's kind of changed the way you see? Do you have a favorite book or a favorite reference that has stuck you?
I mean, the one that stands out is there's all sorts of business books that I've great admiration for some of the biographies and stuff like that. But to be honest, there's a book called Out of Nowhere, and it's the story of the original Wheaton. It's not widely distributed, but it is, it's just a great story of persistence and creativity. It's a great pumpkin. It's tough to get a hold of it. Distributors.
Can you give me a copy?
I don't even have a copy, so I have one copy, my copy.
Fair enough. I'm sure Uncle Rick's still.
It's a great story. It's a simple read, but it tells.
Thank you very much for joining me. It's been an absolute honor and privilege to have you on the show. And guys, be sure to tune in to the next episode. Take care.